In August 2019, a single company prepared to go public on the New York Stock Exchange with a valuation of $47 billion. That figure exceeded the combined market value of Marriott, Hilton, and Hyatt. Yet this company did not own a single building. Its entire business model was to rent office space from landlords, add superficial decor like kombucha taps and exposed brick, and sublease those same desks to freelancers at a markup. Adam Neumann sold this premise as a revolution in human identity. He called WeWork a consciousness company. He spoke with a magnetism that convinced the world's most sophisticated investors to ignore the reality of his spreadsheets. The company spent $60 million on a private Gulfstream jet, which Neumann used to visit surf spots around the world. Venture capital firms knew they were funding a real estate subleasing business. But by applying the valuation of a hyper-growth technology platform, they could continuously inflate the worth of their own portfolios. In October 2016, SoftBank CEO Masayoshi Son toured a WeWork location for exactly 12 minutes. He then pulled out a napkin, sketched a rough diagram, and assigned the company a $20 billion valuation. Neumann looked at the napkin and demanded access to SoftBank's Vision Fund, a vehicle with a $100 billion mandate. This chart shows WeWork's financial structure in 2018. It earned $1.8 billion in revenue, but it lost $1.9 billion. Every year, by design, the company spent more than it made. These losses were a deliberate strategy of growth over profit. The board of directors endorsed this expansion, assuming that rapid scale mattered more than economic discipline. Neumann realized that a business does not need to generate profit if the founder can successfully extract billions in funding before the market corrects itself. On August 14, 2019, WeWork filed its S-1. Before a company can sell stock to the public, it must legally disclose its inner workings. These 359 pages revealed the company's hidden mechanics. The filing revealed firewalls making profitability impossible, rigid long-term leases funded by short-term rentals. Additionally, Neumann personally owned WeWork's buildings, siphoning capital into his assets. Finally, supervoting shares gave Neumann 20 votes per share, making him legally untouchable by his board. While Neumann publicly promoted the company's future to his employees, he secretly sold $700 million of his own stock while the company was still private. The S-1 exposed a perfectly legal architecture designed to insulate the founder from the collapse of his own enterprise. Institutional investors rejected the filing. In 6 weeks, the valuation plummeted from $47 billion to nothing, and the board finally pushed Neumann to step down. But Neumann's firewalls held. To remove him, SoftBank agreed to a $1.7 billion exit package, a financial ransom to make the problem go away. A single paragraph in a Delaware court exhibit from October 2019 reveals a detail the media completely missed. This footnote shows a quiet $5.05 billion debt financing obligation taken on by SoftBank. This $5 billion was not used to save operations or employees. It was a structural requirement to preserve the investors' financial safety nets and Neumann's personal wealth. When the machine breaks, the elite do not authorize multi-billion-dollar bailouts for the enterprise. They authorize them for the architects. While Adam Neumann secured his billion-dollar exit, WeWork announced that 12,000 people were suddenly losing their jobs. Employees who had taken below-market salaries in exchange for equity watched hundreds of thousands of dollars in supposed wealth vanish. Landlords who had signed long-term leases with WeWork were left with abandoned floors and millions in unpaid rent. The believers who built the company were left with nothing, while the man who sold them the vision was rewarded with a billion-dollar fortune. In 2022, Adam Neumann returned to the market with Flow, a residential real estate company that uses the same community-focused rhetoric. The venture capital firm Andreessen Horowitz immediately wrote him a $350 million check, the largest pre-launch investment in their history. The financial elite handed $350 million to a founder who had just destroyed $47 billion in value. Neumann was never charged with a crime. Every self-dealing lease and supervoting share was fully legal and board-approved. The WeWork story demonstrates a system functioning exactly as intended. It privatized billions for the architects at the top, while socializing the losses to everyone else.